Mr. Anil Gupta, the CMD at KEI Industries, joining us. We have, of course, invited him because Prabhudas Lilladher has written a note. They have actually upgraded their stance to a buy from a hold. And Mr. Gupta, it seems like they are penciling in that you're likely to beat your revenue guidance of 16 to 17% with 11% margins, given that Q2 has been better than at least what the street was expecting.
Good afternoon. See, we definitely are trying to achieve better than what is guided, but I will still maintain the guidance which is already given, the revenue growth of 16 to 17% overall for the full financial year FY24, and a margin guidance of around 10.5 to 11%. But definitely we will try to achieve better than this. The scenario is good. There is a good outlook on demand of the cable from the domestic market as well as the export markets, and we don't foresee any problem from at least from the demand side.
Right, Mr. Gupta, this is Vinny joining in the conversation as well. You're maintaining that guidance, but we're at the end of Q2, just a couple of days left as well. How was the demand trend this time? How strong was it? What is the growth that is seen like in this quarter?
See, since we are in, entering into the beginning of the silent period, so I will, as I said, that we are definitely going to do better than the earlier quarter in terms of volume growth as well as margins. But our overall guidance for the full financial year will be around 16 to 17%. And this quarter, we are definitely expecting better than, the guidance, better than the guidance.
Sure, point taken. So at least you're trying and striving to improve and do better than the guidance. But one of the levers for you, Mr. Gupta, has also been the distribution, right? You're trying to scale that up. Talk to me about what the internal targets are. Where are you in that cycle? And what should we expect in terms of deepening your distribution network in the next 12 to 18 months?
Our last year, we have reached approximately 45% of the sales coming from the distribution, and our overall target was to take it up to around 50% of our turnover, and we are on our way to that. So I think that we should be able to achieve that 50% benchmark of our total sales, which is also growing by next financial year. This year we may touch around 47 to 48%, and rest of the journey will cover next year. But as I said, that even our B2B sales are strong and our exports are also covered under B2B. So the B2B is also very important segment for us, and we will be maintaining that and on an overall basis.
Right, and B2B segment is also, which is very strong for you, is what you're saying. Could you just give us an indication in terms of your export contribution? How is that looking like as well? And what is the target that you have on that front?
We are expecting close to 15% of our sales coming from exports this financial year, and our target will be to take it up to around 20% by in the next financial year. We are working on various territories in overseas and getting the various technical certifications applicable in those countries to enable us to export in those countries, especially Western countries like Europe and United States. We are already exporting to Australia, Africa, Middle East, and many neighboring countries. But our exports to these Western countries is improving and will be a bit in this financial year and substantially up in the next financial year.
Mr. Gupta, what could be the differential margins in exports versus the domestic region? I'm just trying to understand how your margin trajectory will move once your export shares does go to that 20% mark.
Overall, I can guide a margin of around 11% EBITDA margin, which will be a average mix of domestic plus exports. So definitely we are going to get 1.5 to 2% better margins in exports.
So the margins are better in exports at least by 150 basis points. But talk to me about your expansion as well. Almost 1,000 crores was in the pipeline. What's the timeline of those capacities coming on board? When will it start adding to your revenue?
The overall expansion of this 1,000 crore should happen within 2 to 3 years period. We have already commenced construction of our greenfield facility, and first phase is expected to be completed by within 18 months from now, and the second and the third phase should take around 2 years and 3 years on an overall timeline.
And Mr. Gupta, your order book, if I have it right, was almost 3,600 odd crores. Could you talk to me about where the growth is coming from? Is it your, extra high voltage cables which are getting a lot of orders? Is it the EPC work? What is the growth driver, and what kind of visibility do you have for order inflows for the next few months?
The order growth is coming from domestic B2B market and exports, and as well as the extra high voltage cables. But so far as EPC business is concerned, that we are targeting not more than 500 to 600 crores on an overall full year period, because we had said in earlier commentary also that we are restricting EPC business because of the cash flow issues.
Right, Mr. Gupta, thank you so much for joining in with us and giving us your time this afternoon. It's a pleasure having you on the show and talking to you as always and getting an update in terms of what we should be expecting from the company as well. Thank you so much for that, Mr. Gupta. But let's